All right. We are going to look at the crypto charts today, namely Ethereum and Bitcoin, of course. So before you wonder what we're looking at, this is the Ethereum chart to start. All of these colored lines here are Fibonacci retracement patterns, and I'm sitting in trading view right now. That's the chart that I'm looking at here. I'm looking at the price chart and of course my handy dandy indicator. I'll be able to share this with you soon. I have a developer working on this as we speak for me to be able to share it with you. But we're going to dive into some stuff and try to figure out, all right, which way is crypto going? Which way is the price going, namely? So let's talk about that. Truth is, nobody knows long term. Nobody knows. Nobody knows. But what we can do is we can look at this locally, which is in much shorter time frames. Speaking of that, we are on the, let me make this bigger again. We are on the 1 hour time frame, 1 hour. And all these lines, so this one, this is a Fibonacci retracement, this whole big thing. And this is taken from the very bottom of so back in the end of mid-July, that very bottom as taken down here, and then the very top in May, and it gives me this Fibonacci retracement pattern, this big one. This one, and these three are taken from more local. I think this one is from the high. No, this one is from the high to this low. This one is from this one to this one, and this one is from, maybe this one is from this one to the high, 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 high. Let me show you what I mean. This high way up here. This high way up here, down to, one of them is from this one to this one. One is from this one to this one. And one is from this one to this one, okay? Now, as we dive in closer here, let's zoom in a bit. You're gonna see these price patterns hit a lot of these lines, showing that these lines act as support and resistance. Now, the reason these lines are so powerful is because of the natural, call it law, that Fibonacci discovered. So it's called Fibonacci stuff. It's not called Fibonacci stuff. Fibonacci is the term associated with it. You see it in nature, you see it in seashells, you see it in leaves, you see it in flows of waves, you see it in everything. Everything seems to follow this certain called Fibonacci pattern because he discovered it. And as do the motions of the markets use the Fibonacci sequences a lot. So this is about crypto trading. By the way, crypto trading, in my opinion, not financial advice, is the most valuable, powerful way to accumulate crypto without having to throw in more money. All right, because you can take the crypto you already have and you can trade it. Of course, you can place what's called a long, meaning that you think the price is going to go up. And as the price goes up, you get more Bitcoin. Sure, the Bitcoin you already have goes up in value too, but as it goes up, you're actually accumulating more Bitcoin in addition to the price appreciation. And when you place a short, as price is coming down, you are accumulating more crypto. If you place the Bitcoin short, you get more Bitcoin. This is Ethereum, so we've been accumulating Ethereum on the way down here. And typically, here's the way that you want to trade. This is my goal here is to help you learn trading and help you learn other ways to accumulate crypto, because crypto is the future, my friends, and it's already here. It's already here, and it's just keep growing, growing, growing. I mean, it has been adopted at a rate of 113%, fastest adopted technology of all time. The fastest before that was the internet, and that was being adopted at about 65%. So that is significantly faster. VCRs were also adopted pretty quickly, somewhere around 60%. But crypto is coming into every aspect of our life. Obviously, it's completely changing the financial system and will continue to do that, as well as give us more sound money, right? Because what we think of as money now would be like a US dollar. But that's not money, that's currency. That's different than money. Gold is money. Bitcoin is money because they're finite resources. A dollar bill is just an IOU. It used to be backed by gold so that you could turn it in and actually get gold, which is real money, and that's what it was. It was just a note. It's just a note, a legal note of tender. And over time, we've just kind of gotten confused by that. So crypto is here to change all that, because when you have a system Well, looks like Ethereum just crossed a certain threshold, and I may have to place a trade here. Looks like, yeah, we just crossed 2650, and the reason I had an alert set for that is because of this Fibonacci line right here. Very, very interesting. As you can see here, this is the real time frame right now. You can see this bottom right here, it hit this line almost exactly. See that? See that bottom right there? And you see these two bottoms right here hit it almost exactly? That's not a coincidence. That's not an accident. These things move in familiar patterns, and coupled with an indicator like I have here that I'll be able to share with you all soon, as soon as my developer gets it completely finished, you're able to know when the tops and bottoms are. Green dots represent bottoms, red dots represent tops. We haven't printed a bottom here yet. Now, with that being said, something else important to know is that we have divergences. You want to look for bearish and bullish divergences. Bullish divergences mean the price is going to change from going down to going up. Bullish divergences mean the price is going to change from going up to going down. And one of the biggest ways we spot that is we look for Fibonacci levels. We're at a level here. We're at a level here after a significant drop. This was on the 15th. We were up here at 36.72 on the 15th. And today is the 21st. What time was that up here? 2100. And today's 21st. So basically 6 days, we've come down to 26.54. This has been a very significant drop. We've come down about $1,000 in 6 days. Now, on Friday, which would have been, I think, the 17th, we had the quadruple witching hour. What that is that means that there's four of those this year. That's when stock options, index options, stock index options, and something else, futures, all close on the same exact day, which is a Friday, the third Friday of the month. 4 times a year this year that happens, and that happened this Friday. So that's really interesting for markets. Anyways, I'm not going to get into all that. But here we are. We just hit this price again. Now, look at this. See this green dot right here? It correlates to this bottom, and this is on the hour time frame. So this is pretty solid. This is a good amount of data that goes into each of these bottoms and tops, as well as the candles. Each candle represents an hour. So here we go. There's that, and the price comes lower, but you see here the green dot is actually higher than this one over here. That doesn't make any sense. It should be lower because these are momentum waves for the most part. It's MACD, but it's mostly momentum waves is what I call them. And then this price comes lower yet, but yet this green dot is even higher than the previous two. So that is called a bullish divergence. And what happened? We came down here. We didn't quite hit a level, but what we did hit is a psychological level of about 2,800. When you got a zero, when you got a zero on the end, like 2,800, 2,850, 2,900, it tends to be a level psychologically that traders look at. So that is in line here. I wouldn't have necessarily thought that, but I probably would have taken, I did end up taking this, but I didn't take it till up here when I realized, all right, it's bouncing, because what happens is it wicked down real quick, and then the price action started going crazy. So I knew, we just hit like a violent bottom, so I know this is going to come up fast, and it did. I caught it about right here, about 28.50, I think, and then it got up to here within no time, and then I rode it up to about here. Not based on this time frame. I decided to get out here because we hit a level. You see that blue line right there? That's a different line. Plus we had this one here, so it broke through that one, and it hit, not the blue line, excuse me, the fuchsia line here, but it broke through this blue line, this green line, and it topped out on this red line. I'm going to get into more divergences in a second. Let's go to the 30-minute time frame. See, so now here is a bearish divergence, and this was that spot I was talking about. Look. This red dot indicates a top. This is on the 30-minute time frame. Here's the high. Now you come over here, correlates with this red dot. This red dot is lower than this red dot, but yet this price of this top is higher than this. So that means that's a divergence because the price is higher over here, but the momentum is lower over here. And we're at a level. So it's like that's probably the top, and it kind of lines up with this spot here where this top happened. So it shows me that this line in particular is fairly strong resistance. And so I got out, and now we've been coming down. And I got in a short right here. I got out of my long position, and I got in my short. So from about 28.50, I accumulated on the way up. Now, I didn't hold the whole position the way up. I took pieces out of my trade. You know, I took profit here, I took profit here, took profit here, I took profit here, and I let the rest ride, and I got stopped out down here. And I thought, all right, well, we're clearly going down. This 30-minute divergence seems to be, so I'm going to take a short. We seem pretty early here. We're at this spot. We got this strong resistance above us because this right here stopped us, and that stopped us. And it held pretty good here, too, on the way down. You know what I'm saying? So I thought, all right, I'll take one. And it's been very nice. Now I took profit out here. And then here, I didn't take out any profit because you notice this humongous gap here. There's just no resistance in this zone. It's a big zone from about 3,000 to about 2750. There's just no resistance, as you can see, because it just fell whoosh, down like crazy. And then it came down here. It had some stoppage right here on the top of this Fibonacci line, which was the top of the golden pocket for this bigger time, for this particular retracement pattern. And then down here, it hit this one, and that was the final bottom, it seems like, right? On 30-minute, we've printed. Now, it's given us a nice little line here saying that, hey, this is a divergence. This dot looks about the same level as this to me, so I'm not going to go super ham on this. This one I didn't really go super ham on either. But we have this one here, which was really nice. This one, which was nice. But we have this one down here, which I just, you know, this got down to 2650 basically. And it's just, man, I don't know. If Ethereum goes lower than that, I don't know if we're officially in a bear market, straight up. But I hope this is making sense to you. Let's go to a lower time frame because we just hit this line here. I want to see what's going on. Let's go to the 15-minute time frame. So we're still down here. Look at the divergences. So interesting. Look, this down here. Here's that green dot. Now this one is higher and that one looks higher. So that's what it should be. Same thing over here, right? Because these dots are corresponding with the actual price drop. So I'm not seeing any big turnaround yet. But you see on the 15, we also had this divergence here. That was nice. 3,066 all the way down to 2650. That's over a 10% move. Let's just call it 10%. Let me give you a good example here. Let's say right here at 30, hell, say, what is it? Hell, say 3,050, right? Or let's just say, yeah, 3,050. And I took I put in $1,000 of Ethereum, $1,000 worth of Ethereum. And I said, hey, you know what? I'm going to do 10x leverage on that. So now I have $10,000 in the position when I'm only at risk of losing $1,000. And I'm not at risk of losing $1,000 because I have stop losses in place and I get out of it whenever I want. Plus I have this bearish divergence happening and the whole pattern has been going down. So I'm like, you know, that's pretty good, and I'll stop it out here if I have to, and I'll just lose a little bit. But since I 10x'd it, it came down $400. So that's over 10%. Let's just, for even rounding, let's say I got out here, that's about 10%. So I made 10% on the $10,000, not on my $1,000. Now I only put up $1,000, but I get the gains on 10,000. So what happened there, I did 10x, I have $10,000, right, in there, but I only put in 1,000, but I did 10x leverage. So the lending platform, so the trading platform lends me the money. It's just leverage. This is the way it goes. See, and it goes down 10%. And I did a short, because you make money on a short the same way you make money on a long. So you make money when it goes down on a short, and you make money when it goes up on a long. In this case, when I say money, I mean Ethereum. So if I had $1,000 of Ethereum and I 10x'd it, so I got $10,000 in this position, and it goes down 10%. Well, what's 10% of 10,000? It's 1,000. So I took my real $1,000, wrote it down here, and got back another $1,000. I doubled my money in a 10% move. So I had $1,000 of Ethereum here. Down here, I had $2,000 of Ethereum. See how powerful that is? And it works the same way when it goes up. See how powerful that is? Now, this is risky. It's risky, but you can really manage your risk because you can do stop losses, saying, like, if I got in at, 30, 50, and I said, hey, if this goes up to 3,100, just close my position, because that's where this line is here. Just close my position. Or I can just have my eye on it and decide when I want to go out. And usually I'm watching this type of stuff. And when it comes down here, I'm like, all right, I'm at 30, 50. Now we're at 30, say it comes down here to 3,100. I'm like, all right, I'm going to make sure I'm in profit. I'm actually going to move my stop loss. If I got in at 3,050, I'm going to move my stop loss to 3,040 to make sure, just in case this pops back up, which apparently it did, although I didn't really. Because I got in at 30. What did I get in at? I actually feel like I got in at like 30.60. But anyways, nonetheless, I digress. I don't remember exactly how it went down, but you can do stuff like that. And yeah, you might get stopped out here by this candle, but you take profits on the way down too. Because I'm pretty sure I took some profit at 31. I think I took out 20% of my position, locked in some profit right there, and kept reading the charts. And the charts didn't give me any indication that it was really going to go up. Sure, you got this little swing here, but it's not really going up. No divergences. And it's not really, it came to a level here and came back up and then bounced off this level, which is really what I would expect without any strong divergence. And then, boom, took out profit here. Boom. And this just went down so fast. I was going to take out profit, but it just kept dropping so fast that I just watched it drop. And I took out profit, I think about here, about 2,700. And I'm still in this position. What will happen here? I don't think, oh, look at that. It just went down a little bit underneath that Fibonacci line. So down to 27.27. Just dropped. We saw it just grow a little bit. Let's go to the 10-minute time frame. Let's zoom in a bit. Let's scoop this up. Zoom out. Or in, excuse me. By the way, look at the links in my description for some other great ways to accumulate crypto. Be sure to subscribe to the channel, hit the like button. I really want to show you how to leverage trade. It's the biggest thing I want to show you because it's so powerful. As you saw when I gave you that example of getting in this position up here and doubling my amount of Ethereum holdings as it went down. Because it went down and I said, hey, it's going to go down. And it went down 10%. So I got back $1,000. Granted, I had more in it than that, but I just used that for a nice round example. Now we're kind of coming down under this, so I don't know, and I don't see any reason that it's necessarily going to go up yet. We're on the 10-minute time frame, and I'm not seeing any reason why it's going to go up. That's kind of crazy. I don't know what's going to happen here. What I will say is this momentum wave, if it prints, we'll see where it prints. Let's go to the 5-minute time frame. Gosh, golly, this thing is just dropping like crazy. Although I don't know if that, with so much manipulation going on in the market, I don't know what to trust and what not to trust. I do wish I would have sold more of my Ethereum at 4,000 now. Now, when I sell, right, it's about accumulation. I'm not cashing out. I'm not going to buy new shoes or a new car or something like that. I put my money in assets, but really when I cash out of crypto, I don't cash out. I just put it into stable coins like USDC, and I hold it in my USDC wallet on Voyager. Link for that is in the description because I earn interest on my USDC coin. So my stable coin, my USDC coin is worth $1. So instead of it sitting in a bank, it sits there in my wallet at a stable $1, and I get 9% interest. 9. You can go do this too. Link in the description. Go to Voyager. And when I hold my Ethereum and my Bitcoin in my wallet on Voyager, I also accrue interest. So the first of every month, I get paid interest. So I get Bitcoin, Ethereum, Cardano, USDC coin deposited in my account the first of every month because of the interest payments. They pay me 9% a year on USDC coin. That's what they'll give you too. Link in description. And they just pay it into my account every month. It's fantastic. So when I'm unsure of the market and I cash out, I put it into stablecoin and just let it accrue interest when I decide to get back in. So I sold some of my Ethereum at 4,000. I sold some of my Bitcoin at 50,000. And Bitcoin I bought back in at 47. Ethereum I bought back in at 47,000. And Ethereum I bought back in at 35. So I was able to accumulate more Bitcoin and Ethereum without spending more money. I just took out my profits from the top and bought at a lower price with all that money that I got from the top. Hope that makes sense. I don't know what's going to happen here. This is interesting. Let's go to the Bitcoin chart. Well, let me go to the 20-minute time frame. Let's see what's going down here. Anything? Oh, this is ugly. It's broken through. Now, I don't expect it. If it goes below here, like if it gets below this little mark right here, I don't know, man. We are in trouble if that happens. We are in trouble if that happens. Because then we're going to go sailing through here. Let me grab this real quick. Where's the bottom of this? Look at all this space. 22.9, 2300. I mean, it's very possible that if we break through this, we could make our way all the way down here pretty quick because there's no resistance. There's just no resistance in here. No resistance. Let's go to the, I don't know, 900-minute chart. Let's see what that looks like. Whoops, wrong way. This should take us back quite a ways. Each one of these candles represents 900 minutes. Whew. Okay, so there we are there. So we're kind of lining up with this. And look where this came down to. And right in the middle of this, that could be, what is that, 2450? That could be a spot of support. Plus you see this line here and you see this. But like I said, look at that right there. That kind of, this 2300. Look at it, lines up with some pretty solid support right here. That was formerly resistance. And you see it lines up here too. You zoom it in. Whew. See here. Okay. Whew. Buddy. Let's go with 1200. Let's go with 1800. Okay, fine. Don't give me more than that. Let's just zoom in a lot. Because I really wanted to get it to the... Whew, look at this. I mean, right now, here's where we are. We are below, like you see, this is where the very top of the market was, at 43.72. Got up a little higher than that. I know it got to 44. This is Ethereum. And Ethereum, it came all the way down here pretty quickly to 17.20. Right, 17.10. And it bounced to about 2,900. We're below that right now, significantly. We're all the way down here. Is that where we're at? No, we're somewhere around here. What's our price? 27.30. So we're around this line. We're about right here. So we're below that stuff. Dropping below this sucks, right? So we're right here. If we spend significant time below this spot, I think we'll at least go down to here. I do that because you see this support, this resistance support right here. And then after that, we got like here and here. Like I told you, there's not a lot of support in this humongous gap. So this has got to hold. If this doesn't hold, we're probably going to come down to here. And with that being said, I'll just be watching the chart. And if I think it's going to go down more, if I see some indicators that it's going to go down like this, right? Look at this. See this red dot right here? Indicates this high. This red dot down here indicates this high. This red dot down here indicates this high. And this high is higher than that high, is higher than that high. So that is a strong, plus we're on this 20-hour time frame. That was actually a strong indicator that would drop, but it didn't drop that much. You know, it went from 32.6 to went down about $200. I mean, that's decent. It just doesn't look that crazy when it's not really showing to go up here. So not every time frame is going to be relevant. 20 is a lot, right? I don't really trade more than the 4-hour time frame. So let's go to the 4-hour time frame. What is that? 240 minutes. Let's check that out. I hope you find this educational, okay? Hit that like button, hit that subscribe button. I'm trying to bring you all kinds of good content on how to accumulate. Because whether the market goes up or down, you can be accumulating because the future of crypto is unquestionable. It is absolutely unquestionable. And if you don't agree with me, go do your research because you need to understand and be more aware of what is really going on here, what this really is. This is like Internet 95. Right? In 1995, you know how many people were saying the internet was not going anywhere? Because they didn't understand what, it's not because they're dumb. They just didn't understand what it was. In crypto, if you don't think it's going to be a massive part of our future, you don't understand what it really is. Right? It's like telling me the internet's not going anywhere. It's like telling me smartphones aren't going anywhere. It's like telling me computers aren't going anywhere. Like, no, they're not going anywhere. They're just going to fade out. I don't see the use for them. So what if you don't see the use for them? That doesn't mean anything. That doesn't mean they're not extremely useful. So we're sitting down here. This is a tough ass spot. Let's go to Bitcoin real quick. I don't think I have any Fibonacci lines drawn here. Oh, I do. I don't know how relevant these are because I drew these not today. And with these new lines, I need better lines because these ones don't seem to be holding up very well at all. Sure, hit a little bit there, hit a little bit there, blew right the hell through that. We hit some support around here, I guess. Blew through that. Goodness gracious. I mean, here we were, pretty much 53,000. Now we hit a bottom of 39.6. Where are we at right now? 40,006. Whew. I don't know. I mean, Ethereum's down more, I think, than Bitcoin, but damn, this just does not look sexy at all. Let me scroll this in. Let's go to the. I wish I could just. Where are we? Let's go to the day chart. Zoom it all in, baby. Whew. I got them spread out too far. Let's do this. Whew. And we go to the. Let's zoom in on this. So some of these lines are holding up pretty well. Boy, that's just this gap here. What is this price? Goodness. When was the last time we were this low? 40,289. We gotta let's go to the 5-day chart. Goodness. This can't be the 5-day chart. Yeah, this cannot be the 5-day chart. This cannot be the actual 5-day chart. So it came all the way up here. This can't be the actual 5-day chart. Let's go. Yeah, there we go. I don't know what was going on there. Let's scroll this down. Let's scroll this down. Hit that like button. Zoom this out now. No. That's not what I'm doing. Okay. All right, let's look. Check out the links in the description, by the way. Lots of good ways to accumulate crypto without spending more money. I spent a lot of money in the bear market, but we're not in the bear market yet. So Bitcoin's prices, I did not like dropping below this. Because look, see right here? God, I didn't like dropping below that. We're below it, we're down here. So we kind of got this support by, this. Ugh. So if we drop below 36.9, which is a real possibility, boy, we could come all the way down here, come down to 30, and we could just enter the bear market and just go down. But I just don't think that. I don't think the run is over yet. I really don't. I think it'll end in November, December. Because I don't want to get into all the reasons why. I'm not convinced we're in a bear market yet. I actually bought some more Ethereum today, like actual cash. Because I think it's a good deal. Because again, I try to follow what the whales and big money are doing. And when I looked at the data, whales and big money were buying the dip. So, yeah, I tend to follow what they do, in large proportion. Because they determine a lot of the market, you know what I'm saying? Goodness, golly. Zoom that up a bit. Zoom in. Let's go to, boy, oh boy, and we're right here. Well, we're at 48, right? So we're probably, oh boy, where are we? Whew. I think we're at 40,800. Goodness. And the price is moving a lot. Whew. So we're right around here, where that dotted red line is always, where the dotted red line is. And I'm in the trading view. This is what I'm using. Again, I'll be having this indicator for you soon. As you can see, A lot of good stuff here. I don't trade on the 20-hour. It's like almost too much data, so it's hard to time anything. Granted, you go in right here. It's a nice trade. You get in right here on this red dot, 46.5, comes down to 44.2. It's a really good trade, about 5%. But you can get those trades in bigger using smaller time frames like the 1 hour. Let's go to the 1 hour. See if we can see anything that tells us an entry point, which I don't see an entry point because we're not at a level. Step one, you got to be at a level. You got to be around a Fibonacci level or some kind of zone of support. I basically just use Fibonacci's because you can see I already have so many damn lines on here. So we're lower. Boy, oh boy. We went lower there, and I don't see, I mean, this did go up some. See what I'm saying? This bullish divergence, this price indicated here, this price is lower, and then it hit this and came down, and it shot up all the way from 40,200 to about 43.5. So that's a good return right there, really quick too. This is over the course of like 6-7 hours. Now we're down here. It looks like they're going to print a dot. Looks like they're going to print a dot that is, of course, higher than this one. So I expect maybe a come up again. But I'm not placing any trades right now. This thing is so heavy going down, but I don't see anything major. Like this sent you down. This was really good, right? Right here, you see these divergences. This one's clearly higher than that one, even though the price has been coming up. These things can take a while to manifest. So we hit up here. We came up to almost a line. Almost a double Fibonacci line, actually, because I got this little box and this big box, like 2 lines right there, and I hit a top of about 48.8. Now it's come down to as low as 39.5. If you had taken a short here and you stayed in your whole position, which I wouldn't do, I wouldn't stay in my whole position. I take profits along the way, and usually I leave at a certain point, probably about here. I leave 25 to 33% of my trade to let it ride. And boy, would have it rode. Because take a short on this, I mean, if you put in, say you put in a whole Bitcoin right here, right? Say you put in a whole Bitcoin and you use 10x leverage. So, say Bitcoin is about 50,000 there. So you use 10x leverage, all of a sudden you have $500,000 in this trade. This thing comes down 20%. 20%, over 20%. So since you did 10x leverage, your 1 Bitcoin, because if it went down 20%, since now you have 10 Bitcoin in there, well, your profit is 2 Bitcoin, because 2 Bitcoin is 20% of 10 Bitcoin. So your 1 Bitcoin would now be 3. See how powerful that is? This is what I want to teach you to do. I want to teach you how to leverage trade, okay? I'm going to end this stream, or not stream, but and these are the 2 platforms I use. I'll have links in the description for those 2. These are the ones I leverage trade on. Keep following the channel, hit the like button, and I'll see you soon. You're awesome.